Steve, what are your first thoughts on this report right now? And I'll just point out, we're looking at the futures. They paired their losses a little bit, but we still got a 7-point loss on the Dow futures right now. Steve, go ahead.
A little disappointed, actually. I was thinking and hoping for closer to 200,000. I think, what was the number, 156 or something like that. You know, that's ho-hum. It's not really good. And you know, I think that when you look at the natural growth in the labor force, it's just not a very positive number. I'm a little disappointed. And, you know, I'd like to hear those wage numbers again, because I was having a little difficulty, you know, seeing how much the... Yeah, what were those? What was the wage growth for December?
Last month, average hourly earnings for private sector workers advanced 10 cents from November, or 0.39%.
Yeah,
it was
not bad.
A little better than expected. Year-over-year wages rose 2.9%. That is the best annual gain in more than 7 years. It was 2.5%, I think, in the previous month.
So, you know, that's running a little bit above inflation. It means many workers are getting pay raise increases. Remember, I always make this point, that's the average wage, it's not the median wage. So you're seeing people at the top getting big pay increases, not so much people at the bottom.
Brian, what is your take on this report? Because, again, you know, as concerned as President Obama is about his legacy, that they're going to make the best of what's happened in the last 8 years. But, again, you've had an economy that was slow to grow coming out of the recession. The job creation this was the 75th straight month that U.S. employers did add jobs. But again, you have not seen the wage growth in the last 8 years.
Yeah, you know, this report is really what we've seen time and time again. Steady job growth, but underwhelming, not a really significant change of the economy. Look, it sets the table for Donald Trump. I mean, in 2017, the Fed's probably going to go with the plan that they laid out. This doesn't change interest rate expectations. And really the question now becomes, can Trump get through the regulatory and tax changes that we've been talking about that are so important to the economy? That's really the only way you're going to get that participation rate number to come back up. It's been stuck. This trend that we're on is the trend we've been on. We've got to see an inflection point, and it's going to be some of those legislative regulatory changes that make that happen.
And the labor force participation rate, Joni, did move up to 62.7% in December, but that was just up 0.1%.
Yes, you know, still, you know, not robust or strong. Hopefully we will start to see some movement in that number over the next few months. I believe we will, based on the trends that we're seeing right now. But I do think manufacturing was really a highlight of this report. You know, we may look at this report and say the headline number is not that strong at 156. It's kind of been that lackluster job growth that we've looked for, but manufacturing coming in at 17,000 jobs created is a very strong number. I mean, I believe that 2 years ago we only had about 17,000 jobs created in manufacturing for the whole year. It was really the sector that got hit the hardest, and we see President-elect Trump focusing on that sector coming right out of the gate before he's even in office. So I believe we'll see more movement there as well. But the other piece that's also positive is seeing that wage movement in the hourly worker. It did bump that year-over-year percentage up, and great to see it moving in the right direction. I think we'll see more of that as well.
Charles, I'm going to check Twitter while you talk to see if Donald Trump is yet taking credit for some of the manufacturing job moves in the month of December.
One of them.
but Steve, he has, you like it or not, he has called these companies out by name, and you hear Black & Decker say, hey, we're preemptively moving jobs into this country. Ford canceling a $1.6 billion plant down in Mexico. Charles, I want to get your take on this jobs report.
You know what? Adam talked about for the year, the average was 180,000. The year before, 180,000 new jobs per month is the average. The year before, 229. The year before that, 241. The bottom line is we were drowning. Okay?
Yeah.
And I think the moral of the story here is that we made it, we're alive, and we're ready to live for a new day.
Great point.
There's a small heartbeat, but we are alive. Because, I mean, that's a precipitous decline in the last 3 years.
2.2 million jobs for the year, 180, as you pointed out, per month on average. The worst calendar year performance since 2011. This economy, even though it recovered from the recession, it's been heading in the wrong direction.
That's because we never could grow the economy. The economy survived on our DNA and our natural instincts as Americans, right?
And the Fed and the monetary policy.
I think after a while, even that stopped working, and it never worked for Main Street to a degree. Maybe auto sales. So all of those $4 trillion, it kept the banks alive, but the banks didn't lend us money. But I do believe it's our natural instincts that have kept us alive this long. But we want to grow. Pull down the speed bumps, take down those brick walls. We want to grow.
Be owners, Charles. Start our own businesses and own our own destiny. Be able to make our own decisions with our own money.
That's what this election was all about, allowing us to pull ourselves up by the bootstraps.
I think that adds to Charles' points. The last 8 years have really talked about, they've been signified by low rates, slow growth, and high regulation. So now I think as we move forward into rates rising a little bit, growth picking up a little bit, and a lot less regulation, I think that sets the stage to really see what the U.S. economy can do. So we've been held down for a very long time, but I think now people are starting to feel a lot more optimistic, and I expect a lot of positive change.
You know what's a number that's interesting to me is the part-time jobs number, and that's at 5.6 million. And what's interesting about that is that if we do roll back Obamacare, I think that number is going to change significantly, because you're seeing a lot of small businesses and businesses actually move employment around because of Obamacare. They didn't want to.
Right.
Thank you.
Sure.
I asked Kathleen Sebelius, former head of Health and Human Services, that earlier in the week. Thank you. Because I said, you created a law that encouraged small companies to hire part-time people.
Yeah, and
you,
so that's
you
why
discourage full-time employment by the creation of this law.
Yeah, and that's why I brought that up. And so we can talk about the labor participation rate, but I think this is the number that we need to focus on, and this will be a lasting legacy for Donald Trump's presidency, and that can actually help push the needle. So I think that goes back to why the Republicans actually earlier this week did focus on Obamacare and did put it at the forefront of the thought, because this all ties in together with the economy. Yeah.